In the last 24 hours, we have seen President Trump and his administration back off two critical items that were truly roiling the U.S. economy. They were roiling the bond market. I do think that, once again, the bond market, the dollar going down, rates going up, likely Scott Bessent, our Treasury Secretary, had some big influence on this. But folks, if you haven't heard the pivot, the retreat, the change in tone on a couple of topics, you are missing out. Number one, I was very surprised he said this, but he did. He said, I have no intention of firing Jerome Powell. Obviously, we have talked about in the last 3 or 4 days the fact that President Trump was looking to perhaps replace, fire, put in a chair early just to kind of be that plan B. But yes, apparently the bond market wins again. There's that old saying, when I come back next time, I want to be the bond market because the bond market always wins. I think that is very interesting. So again, what you are likely seeing this morning, and I haven't really checked because I've actually been on call since 7 a.m., I'm going to guess the 10-year note is down and probably down big today, I would guess. Again, I have no intention of firing Jerome Powell, but that was only one of two pivots that are important, that are sending us hopefully on a better path. Number two was, I think we will make a deal with China. There was a lot more talk about the fact that these existing tariffs are unsustainable. We've essentially embargoed both countries, and it's not good for either of us. So what we may have just seen, folks, and again, this is a may, because this could change, this could change in a minute. We may have seen the worst of the kerfuffle. We may be on a path where news gets incrementally better. Now, again, I want to be clear. We're not starting from a great place. So the fact that news gets incrementally better is probably not saying much. But the fact that we now at least appear, right, President Trump himself says, I have no intention of firing Jerome Powell. We need to see what happens in the bond market. Again, I should have checked. Actually, you know what? I got my phone. Why don't we just pull this out? Let me check. Wow. As of right now, it looks like the 10-year note's down 10 basis points, not 0.01. We're talking 0.1. So again, a significant down. And also it looks like our largest, I don't know what you want to call it, adversary, frenemy, whatever you want to call it, China, it looks like that slog is moving in the right direction. Again, nowhere close to being done, but thankfully, and I think all of us should hope for, the worst is behind us. Again, there's that old country song, if you're going through hell, just keep going, right? Don't stop and smell the roses. So again, hopefully that is true. Tesla did release earnings yesterday. I don't know if you saw it. They were not particularly good. In fact, they were worse than the market expected. Tesla had 20% drop in auto sales. So the Tesla brand, clearly taking it on the chin. Total revenue was down 9% year on year. Musk did come out and say that his time in Doge will drop significantly next month, which I have to imagine the folks at Tesla would appreciate. So again, maybe the worst is behind, don't know, but I did think that precipitous drop in brand deterioration was significant. Got some other earnings. Enphase missed top line, missed bottom line, and had very weak guidance. If you don't know Enphase, they're in the solar space or green space. So again, pretty bad. SAP, largest software company in Europe, beat top line, beat bottom line. Again, posted great numbers. Capital One, they met on revenue, but they beat on earnings. So again, lots of stuff going on. Earnings really start to ramp up today going forward for non-banks, non-financial institutions. So we will learn more about forecasts and people bringing down guidance. We got a lot of Fed speak. Let's go for that first. Then we'll talk about Ken McElroy. Fed President Kugler. I support maintaining policy rate steady, a.k.a. no cut in May, likely no cut in June. Q1, to show some front loading of purchases pre-tariff. You know what, folks? again, we got one right on this channel. I indicated to you weeks ago that Q1 was going to see an artificial bump from purchasing not only consumers, but businesses. Businesses were pre-buying inventory in a big way, and it will show Q1 probably stronger than the underlying market, but it will post a good number. Tariffs likely to increase prices. Thank you, buddy. Upside risk to inflation and downside risk to jobs, aka stagflation. Again, I think we really need to understand that stagflation is a non-zero chance and probably a double-digit chance for 2025. Fed President Barkin, many reasons to be concerned about consumer spending. Again, the Fed has been talking about soft and hard data. Again, if I am right, the hard data is going to start coming fast and furious in about 3 to 4 weeks, just about how much consumers step back, businesses step back, and the likelihood that Q2 is not great. Fed President Kashkari, layoffs are adding to uncertainty and will eventually show up in the economic data. Now, in this case, Kashkari was referencing the federal government, but I do think, and I'm starting to see more and more people lay off because of the tariffs. This is coming, right? If these tariffs stay in effect for another 4 to 6 weeks, small businesses are going to be in trouble. In fact, Goldman Sachs, small businesses struggling. They want to reduce exposure. Oh, some investors want to reduce exposure. Sometimes I can't read my own writing. I apologize. Next, from Kashkari again, sharpest fall in confidence since March of 2020. Folks, that's not a good comparison. You don't ever want to be compared to March of 2020 because that was bizarro land. Dollar down, rates up means investors are reassessing where they want to invest. This is critical. This is something that I've talked about with Taylor from Life Goal Investments. I've talked with other investors. I'm like, this is a problem. If we're having foreign entities, even if they move 5 or 10% of their investment capital from dollar-based assets to something else, we have a problem. And again, I think that is understood by Scott Bessent. I believe Scott Bessent has gone to President Trump, and President Trump suddenly says, and I quote, "I have no intention of firing Jerome Powell." That's just how this works. Kashkari, last thing, we'll move on to Ken McElroy. It is too soon to judge the path on interest rates. Again, there's no cut coming in May, likely none in June. Want to thank somebody for joining school. Again, folks, don't forget that school is the place to be. $20 a month, 67 cents a day. If you have any interest in working in the year of the investor, you want to get around others that are doing the same thing, get the thousands of bucks in free education, just get around people doing the work. That's why you want to be there. Your friends aren't doing the work. We have a platform on school of 350 plus people doing the work. That's where you want to be. It's a $20 admission, right? Your monthly dues are $20. Get around other people doing the work. I do not know why you haven't signed up yet. It is the place to be. Let's talk about Ken McElroy. Ken McElroy put out an excellent tweet yesterday talking about the 5 proven strategies to skyrocket your wealth. If you don't know who Ken McElroy is, he is obviously a very large and successful multifamily, aka Class A apartment investor. I think he's up to 10,000 units, likely on the path, if not already, a billionaire. Number 1, cash flow is king. I always like to say on this channel, make sure cash flow is day one with existing cost of capital. And then to Ken McElroy's point, again, getting big, cash flow can be reinvested to add scale. Think about cash flow, as Dion would call it, the income snowball, right? It just gets bigger and bigger. Number 2, leverage other people's money. Now, again, in this case, Ken is not necessarily talking about private money. He just wants you to understand when you put 20% down, you are only bringing your cash to 20%, but you're getting 100% of the appreciation, 100% of the cash flow, 100% of tax advantages, depreciation, and the like. So again, it amplifies return. But of course, don't forget, if you got leveraged the wrong way, it can kill you. Number 3, force appreciation. Said another way, buy a fixer-upper, buy something that needs some love, and find ways to add value, increase rents, the old standard story. This was something that Brandon Turner and Bigger Pockets brought to fame with Burr for small-time investors like myself. So again, find ways to understand underappreciated, underloved properties, and you can go a long, long way. Number 4, tax advantages. We've already touched on depreciation. It's a non-cash expense. It makes your income look less. Means you get to keep more. I also like to highlight, Ken didn't, but I will highlight here, 1031 exchange. Sometimes you have assets that are frankly overvalued. Sometimes you have assets that just, you don't need them anymore, right? They've been fully depreciated or whatnot. You do have the ability to 1031, move the equity untaxed up to a bigger asset. 1031 exchange allowed us to go from 8 houses to 80 units. If you want that story, go buy our book, One Rental at a Time, on Amazon or Audible. And don't forget, Dion is the wonderful man who is the narrator of Audible. It's just so awesome that he did that. And finally, number 5, this is the one that I got wrong in the beginning, but I'm such a big component of now. Build your network. Folks, at the end of the day, lots of you watch me each and every day. These videos typically get 5,000 views a day, which I appreciate. Thank you, thank you, thank you, thank you. However, a lot of you are making the same mistake I did. You're trying to do it alone. You're trying to do it with your friends and your family. Folks, you need to get into rooms and groups of people that are doing it. I supply a platform on School called One Rental at a Time, where it has 350 plus folks, lots of free education, 6 masterminds, and a forum where you can ask questions. Again, remember, you get out what you give. So if you're going to join School, don't be a fly on the wall. Introduce yourself, say you're there, tell them your buy box, tell them your experience, and then trust me, the go-givers and the family atmosphere of that School platform will do you well. Next up, it is new home sales. We got the report of new home sales. And to say new home sales were shocking is an understatement. Folks, if we rewind the clock and remember this is for last month, what happened last month? Rates noticeably moved up. We started this uncertainty period, I think is the word of the day. But guess what happened? Let's go through the numbers. Last month, we did 676,000. New home sales. It was expected to tick up slightly to 685. Again, we are in the spring selling season, so they're expecting spring selling season to be bad. They're expecting spring selling season to be slightly better than the month before. But guess what happened? New home sales were up to 724,000. In the face of uncertainty, new home sales went up and up in a big way. They went up 7.4%. Think about that. Now, kind of subtlety behind the data. Northeast, perhaps the market that is still a seller's market based on inventory. Northeast down 22%. The South, which if you don't know, the South is the largest market for new home sales by quantity, was up 13.6%. So again, lots of stuff going on, lots of surprises in the new home sales. Lots of doomers are going to have a hard time explaining what the heck just happened, but it's really simple, folks. Home builders are finding ways to move inventory with lower prices, rate buy-downs, smaller footprints, and you know the deal. Last thing, I will give a shout out to Lance Lambert, our friend from Resi Club and Thursday weekly guest. The spring housing market has set a multi-year high for price cuts. Price cuts now come in at 33.9%, folks. Remember, for most of the country, it is a buyer's market. And again, if you are following the year of the investor, we are looking at our buy box. We're looking at our buy box grow. We're looking for days on market. We are writing disrespectful offers, and we are following up on disrespectful offers. Folks, have an amazing day. Do not forget to check me out on Spotify. My team is posting all of the content that is on YouTube, on Spotify. We now have over 10.1 million streams or listens or whatever you call that. So again, we are a big podcast out there with over 10 million listens. Folks, have a wonderful day. Take care of yourself. Later.